We are live. No one's watching. I can watch from my phone. You have one viewer.
Tell me and just give me a sign when we get one fucking follower. There's one? Other than you. Two. Okay. May, what are we? June? May market update, episode 284. There's a lot going on in the market. There's a lot, that's not the right way to say it, on the outer sides of the market affecting us that are going on as of late. So we're going to touch on a couple things. First of all, last week we went through the Lower Lonsdale unit for the rehab project that we're going to do. So a little revamp and relist. The unit is not ready, so we are not showing the finished product today. It will be finished at the end of this week. So next Wednesday, we'll jump back in to the recap of what we have seen then and there. And it's looking good. It's coming together perfectly. So I'm excited for you guys to see the finished product and the market next week. Surprising, I didn't get a call on that listing for 2 months. And the second I hand the keys over to the contractor, of course, I have 5 showing requests now, so that's some fun for you. So there's that. The next hot topic, the rates. The rates. Everyone opens their Instagram, they can see, wow. From all the realtors and all the mortgage brokers, the rates have been adjusted down for the first time in 4 years. We were at 5%. We are now down 0.25% at 4.75. I believe the mortgage brokers call that 25 basis points. I hate that term, but that's the industry that we all live in. So the first cut in 4 years, very welcome for those variable rate mortgage holders, those flexible rate HELOC holders, those construction loan holders, all the fun stuff. So hopefully this is the beginning of a trend. Follow your favorite mortgage brokers to get deeper information on this. But one topic I did find interesting while looking into this morning, we are the first of the G7 countries to ease on rates. Very interesting. Now, does that mean our economy is the furthest in the dumps in the G7? Possible. I believe the ECB, English Central Bank, Central Bank of England, maybe I'm getting that wrong, is expected to do so tomorrow or this week, but we're the first, so we can wave the flag of success there. Now the market update, I'm gonna jump through this so we're not on a 30-minute video here. Still interesting, similar trends to last month, except we've had a few different spikes along the way there. So we've got the market numbers here, which we'll jump through quickly, and then a couple headlines, trying to keep this under 20 minutes, Al.
Are you sure about that?
For the first time in ever. So all of Vancouver sales, Greater Vancouver, we've got 2,733 sales in May, which is a 19.9. So basically a 20% sales decrease year over year. And we've got a 19.6% under the 10-year average. So the sales out there are hurting. Can you use that as leverage? Maybe. Sellers still seem to be resilient, but the sales are down. Detached, that's year over year, we're at 18.9% decrease in Greater Vancouver detached. Attached townhomes, we are at a 14% decrease year over year, and apartments, 22.7% decrease in sales year over year. So every fraction is hurting when it comes to the sales numbers. Now the listings. New listings, Metro Vancouver, all product types. We've got 6,374 new listings, 12.6% increase year over year, and 7% increase over the 10-year average. So the listings are piling on finally, and the sales, though moving, are not in that same trajectory as we've seen. Metro Vancouver total listings, as of end of May, 13,600, which is a 46.3% year over year increase and a 19.9% 10-year average above. So the listings are up, the sales are down. Now, the interesting part about those blanket numbers is they are the big picture. Now, when we narrow it in a little bit, it gets a bit more interesting, but first, of course, Metro Vancouver benchmark pricing, sales ratios, as we narrow it down here, total market is at 20.8%. Seller's market, detached 16.8%, balanced market, townhouse 25.1%, seller's market. Apartments, 22.5% sales absorption, seller's market. It's all like this. It all depends on what channel you're going down. Benchmark pricing, all properties are now at 1.212 million. That's a 2.3% increase year over year and a 0.5% increase month over month. Detached, 2,062,000 is the average, 5.9% year over year increase, as we've continued to see. 1.3% increase month over month. Who's talking? Son of a bitch. We're doing a live right now. And of course, we've got some trusted colleagues insulting the lack thereof views we're getting on there. I appreciate that. There's a first for everything. Attached, 1.145% is the average benchmark. That's up 5.2% year over year and 0.9% increase month over month. And apartments, $750,000 is the current benchmark, 2.2% increase year over year and 0.3% decrease month over month. Now, the benchmark pricing, best performing neighborhood is the Sunshine Coast. We've got a 2.5% increase in benchmark prices month over month. Worst performing market is Pitt Meadows at 0.8% decrease month over month in benchmark pricing. Almost done. Detached, best market is West Vancouver. We've got a 3.1% increase month over month in benchmark price. Pitt Meadows, minus 1.2% in the benchmark price decrease. Townhome, best market, Whistler, benchmarks are up 3% month over month. Worst market, Burnaby East, down just at 1%. And the condo market, best performing, Port Moody, 1.6 month over month benchmark increase. Worst performing condo market is Tawasin, a 2.1% decrease month over month. West Side's hottest markets right now, the West End in condos has a 23% sales to active listings ratio, which is a heavy seller's market. 43 condos listed over $5 million, just so you know. And then the detached market, the strongest segment of the market is Kerrisdale, which is a 50% sales to active listings ratio, which is a very, very, very mid-COVID 1% interest rate market strength seller's market. 50% sales to active listings ratio. We haven't seen that in years. And 129 homes on the west side of Vancouver are currently listed over $7.5 million. That's the stats. Timeout. 8 minutes? Oh my God, this is goddamn glorious. Okay, so we've got 2 headlines that we're gonna read here and then we're done. Well under the allotted timeline. 1 live viewer and you beautiful people at YouTube at home. Now, headlines from the Globe and Mail, May 28. Trudeau says housing needs to retain its value. A little contradictory in the current environment of affordable housing for all. It reads, Prime Minister Justin Trudeau says his government aims to make housing more affordable for younger Canadians without bringing down home prices for existing homeowners. Contradictory. Cutting shelter costs while ensuring that homeowners' property values remain high could be viewed as contradictory, but Mr. Trudeau was adamant this time, that property owners will not lose out. Housing needs to retain its value, Mr. Trudeau told the Golden Mail City podcast. It's a huge part of people's potential for retirement and future nest egg. So we know, I've heard stats on the last week, he's spent $86 billion in his tenure so far on housing and bureaucracy building, basically. I believe on all fronts, housing has almost doubled from rental to residential since he's taken power. So clearly what he is doing is not working, and the only way for him to do this contradictory move here is, of course, by building new inventory with tax dollars, because the private sector, which actually builds the inventory, will not be doing this. So this is a very headline-grabbing statement, but again, the credibility on the federal front for housing is gone, as everyone should be on the same page for by now. And this is just another headline grab to keep his name circulating amongst positivity. But of course, I'll be the cynic here and say that's going to be another failed attempt. And last but not least, controversial Chinatown project heads for the finish line with help from legendary architect. There'll be another few years until buyers take occupancy of 105 Kiefer. So this is the last block beside the Kiefer Hotel, which houses the Kiefer Bar, which is kitty corner from Andy Livingston Park down in Chinatown. Currently a parking lot, now fenced, and will get underway. But there was a lot of domestic community controversy over what was going to get built here in the heart of Vancouver's Chinatown, making it a 13 or 14 year undertaking from the time of its initial development proposal. One of the city's longest ever timelines for condo development to come to fruition. A decade in, the development saga of 105 Kiefer, You never want that word tied to your project as a developer. In the heart of Chinatown, will soon enter the phase where developers can start pre-selling, expected this fall. And one of Vancouver's most famous architects is helping them realize a project that's been one of the most contentious and drawn out in the city's history. So, speaking of Trudeau and the current governments, from federal to provincial to municipal, the red tape strikes again. I'm surprised they didn't just fold the project, but they didn't. I believe BD is the developer here. Anyway, this is on a May 30s Stories article for all of you who care. And that's it. We've got the updates, we've got the stats, listings are up, sales are down, we've got lower rates by a smidge. Hopefully this is a trend coming. Next week, we'll tune back into 1903 at 1880s Kiefer to jump in on that Revamp and Re-list Part 2. And I think this is the fastest video we've done in handfuls of years. Until next week, that's it.
You guys watching?
I would goddamn hope you guys watching. Jesus Christ. Is that the one viewer?
Yeah, two.
Her and you? Hi, the two watchers that I can't live without. Love you. Bye. How the hell do you turn it off?